Welcome to my channel, Wealth Ledger.
Is investing a scam? It's a question that comes up more often than you might think. Some people swear by investing, claiming it's the only real path to wealth. Others insist it's a rigged system designed to benefit Wall Street, hedge funds, and the already wealthy, while ordinary people get left behind. If you've ever felt skeptical about putting your hard-earned money into the stock market, real estate, or other investments, you're not alone. In today's video, we're breaking down this controversial topic. We'll look at why some people believe investing is a scam, the common misconceptions that fuel this belief, and most importantly, the truth about how investing actually works. By the end, you'll know exactly whether investing is a scam, or whether it's the single most powerful tool to build wealth over time. Why people think investing is a scam? Let's start with the obvious. Why do so many people feel like investing is rigged? First, short-term losses. If someone invests in the stock market and their portfolio drops by 20% in a year, it feels like they've been robbed. They put in their money, and now it's worth less. The emotional reaction is often, "This is a scam." Second, bad advice and scams disguised as investing. Multi-level marketing companies, pump and dump crypto schemes, and shady, get-rich-quick platforms often use the word investing to trick people. When those people lose money, they start to believe all investing is fraudulent. Third, the wealth gap. Many everyday investors feel the game is tilted in favor of the rich. Billionaires can afford financial advisors, hedge funds, and exclusive deals, while regular people are left with fewer options. This makes investing feel unfair, even if it isn't technically a scam. And finally, lack of understanding. Investing has a learning curve, and if someone doesn't take the time to understand it, it feels like gambling. When you don't understand the rules of the game feels rigged. The truth about investing: here's the reality. Investing itself is not a scam. In fact, it's one of the most proven ways to build wealth in history. But it does come with risks, and it does require patience and education. Think about it. When you invest, you're essentially putting your money to work. You're buying ownership in companies, real estate, or assets that grow in value and generate income. Over decades, this has created massive wealth for millions of ordinary people, not just billionaires. The problem is when people treat investing like a get-rich-quick scheme instead of a long-term wealth-building tool. If you expect to double your money overnight, you're going to be disappointed, and you'll probably end up losing money. The difference between investing and gambling: one of the biggest misconceptions is that investing is no different than gambling. On the surface, both involve risk and uncertainty. But here's the difference. Gambling is a zero-sum game. If you win, someone else loses. The odds are stacked in the casino's favor. Investing, on the other hand, is a wealth-building system. Companies grow, economies expand, and over time, assets like stocks and real estate increase in value. Yes, there are ups and downs in the short term, but over the long term, markets historically trend upward. That's why Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." The role of time in investing: if investing feels like a scam, it's usually because people don't give it enough time. Imagine planting a seed and expecting a tree to grow in a week. When it doesn't, you dig it up and declare gardening a scam. That's what many people do with their money. But wealth doesn't grow overnight. It grows through the power of compounding, the process where your returns start earning returns. The longer you stay invested, the more exponential the growth becomes. For example, if you invested $10,000 in the S&P 500 in 1980 and left it alone, today it would be worth over $800,000. That's not magic, and it's not a scam, it's patience. Real scams versus real investing. Now, let's clear something up. While investing itself isn't a scam, there are plenty of scams disguised as investing. Knowing the difference can save you a lot of money. Ponzi schemes. These promise high returns with little to no risk. Famous examples include Bernie Madoff. Pump and dump schemes. Certain stocks or cryptos are hyped up to drive demand, then the insiders sell, and everyone else loses. Fake gurus. People selling courses promising you'll get rich quick with no effort. The rule of thumb? If it sounds too good to be true, it probably is. Real investing involves risk, patience, and discipline. Scams promise shortcuts. Who really benefits from investing? Here's where it gets interesting. Investing doesn't only benefit billionaires. In fact, the people who benefit most are those who start small and stay consistent. Take retirement accounts, for example. Millions of everyday people have built comfortable retirements through 401ks, IRAs, and index funds. Teachers, nurses, engineers, and small business owners, not just hedge fund managers, have built wealth this way. The reason some people don't see this is because they start too late, quit too early, or fall for scams in between. But those who stick with it see the rewards. The psychological game. Another reason investing feels like a scam is psychology. Humans hate losing money. The pain of losing $100 is far stronger than the joy of gaining $100. So when markets dip, people panic and sell. Ironically, that's when the wealthy keep buying. They understand that downturns are temporary and often the best opportunities. The unspoken truth is this: investing isn't just about money, it's about mindset. You need patience, discipline, and emotional control. Without those, it will feel like a scam. How to invest without getting scammed. So, how do you invest safely? Here are some proven principles. Stick with proven strategies. Index funds, ETFs, and diversified portfolios are reliable long-term investments. Avoid chasing hype. If your neighbor is bragging about doubling his money in a week, be cautious. Think long-term. Don't panic over short-term fluctuations. Educate yourself. The more you know, the less you'll fall for scams. Automate your investing. Set up regular contributions so you're consistent. By following these steps, you avoid the traps that make people think investing is a scam. The biggest risk. Not investing. Here's the real kicker. The biggest risk isn't that investing is a scam, it's that you avoid investing altogether. If you simply keep your money in a savings account, inflation eats away at it year after year. Think about it. $1,000 in 2000 has the same buying power as about $600 today. That means by not investing, you're guaranteed to lose wealth. Investing isn't about getting rich overnight, it's about protecting and growing your money over time. Why the system feels rigged? Let's be fair. The system does favor those with more resources. Wealthy people have access to financial advisors, exclusive deals, and better opportunities. But that doesn't mean ordinary investors can't succeed. With index funds, online brokerages, and fractional shares, it's easier than ever for everyday people to invest. You don't need millions to get started, sometimes you just need $50. The system isn't perfect, but it's not a scam. It's a tool, and like any tool, it depends on how you use it. Common myths about investing. Let's quickly bust a few myths. Investing is only for the rich. False. Anyone can start small. You need to time the market. False. Time in the market beats timing the market. It's too risky. False. Not investing is riskier. I'll start later when I make more money. False. Time is more valuable than money.
Thanks for watching video. Please share with friends. Subscribe, bell icon, and share.